Hey, finance folk, welcome to the EU Finance Podcast. Instant coffee, instant oatmeal, instant mashed potatoes, instant gratification. We want it all and we want it now. So, today we're going to talk about instant payments. On 26 October 2022, the European Commission put forward a legislative proposal on establishing instant payments. Wait, what? Don't we already have that? I mean, when I pay with one of my credit cards, I've paid, right? I mean, I even get a ping on my phone telling me I just forked out some money, no? So what's the deal? Today, I'm going to talk to Eric Ducoulombier. He's the head of retail finances at DG FISMA, what I'd call the EU's Ministry of Finance. He's the head of the team behind instant payments. So let's see if he can clear this up for me. And I mean this instant. Hi, Eric. Welcome to the podcast. Thanks for joining me.
Hi, Aidas.
Okay, let's get right into it. What are instant payments? What's the difference between instant payments and traditional payments? I mean, I kind of get the feeling that we have instant payments already, don't we?
Well, not really, Aidas. The difference is very basic. With current regular payments, they have to be executed within the next day, so 24 hours. Mm-hmm. With instant payment, the payment gets immediately executed. That means within seconds. That means I send you money, it will arrive on your account within a few seconds, any day of the week, any day of the month, of the year. So the difference is speed and ubiquity, I would say.
Mm-hmm. But when I use my credit card on the internet or whatever, or at a store, my phone pings immediately. So haven't I already, given them my money?
Well, no, it feels instant to you, but it isn't in reality. It is not instant for the merchant. The merchant knows that he or she will be paid, but the money isn't instantly available on the merchant's account. But for you, it feels instant, I agree, but it isn't in reality because this money hasn't arrived. What has arrived is a guarantee that the merchant has that they will be paid. But the money isn't yet there.
Got it. Oh, so it's like really putting it in the simplest terms possible, the difference between an instant payment and a traditional payment is instant payment is the money actually went, while the traditional payment is a promise for the money went.
That's right. With instant payment, the money is instantly gone and instantly arrived on the recipient's account.
Got it. So that means the merchant has actually gotten the money. He knows he's got the money. It's in his account. He can use it. He can spend it. And also they can probably then get the merchandise that I just bought out the door faster because they're not waiting for my payment to clear. It's already cleared.
That's exactly that.
Got it. Okay, great. Well, that's now I get that part. Okay, well, the Commission presented its proposal on the 26th of October of this year. Why is there a need for EU legislation on Euro instant payments?
The instant payment technology has been available for about 5 years. But in Europe, the uptake of instant payment is still pretty slow. We have measured that only about 13% of the credit transfers are instant. And this is insufficient given all the benefits that we have identified for instant payment in terms of competition, in terms of innovation, in terms of open strategic autonomy. So 13% is not sufficient, and we still have a good 1/3 of EU banks that have not equipped themselves with the capacity to send and receive instant payment. So this proposal, once adopted, will be an accelerator of a trend which is already taking place, but too slow in our view.
So basically, the industry did have the capacity for instant payments already, but they just weren't not offering it to us, to the consumers, to the customers at a rate that made sense. So basically, the Commission is just nudging the industry to actually get its act together. Do I get that right?
Yes, absolutely. Nudging or forcing. You can say it the way you want.
Okay. Well, what are the benefits of this proposal for us, for the European consumers, and for businesses, for merchants, but also for those same payment providers that you're nudging, and also for public authorities, for the state?
Well, the benefits, I would say, for for us consumers are obvious. The possibility of not only paying, but also being paid, for example, receiving your salary, any day of the year, at any time of the day, is a huge benefit. Well, think about, for example, you are a bit late paying your tax. It's 5 to midnight on a Saturday. Well, if you wait until past midnight, you will pay penalties. With instant payment, you have the absolute guarantee that even though it is 5 to midnight, the money will be arrived before midnight on the account of the tax authorities. That's just an example, and there are many other examples, of course, where you can see the benefits of being able to pay and being paid within a matter of seconds. For merchants, it is a huge opportunity for them to manage their cash flows more efficiently. The fact of receiving the money immediately and not just a promise for future payment. This is a huge benefit for merchants. All the merchants are impatiently waiting for instant payment to emerge, let's say, in a much more frequent and general fashion as we have now. For the payment services providers, for fintechs, for example, they will be able to design business models that will be competing with the incumbent payment services like the cards, for example. So again, the fintechs can't wait. They all say the same. We love instant payment. We will be able to design innovative and competitive business models on their basis, especially in shops, to compete with cash and cards. So for them, this is great news. Even for the banks, they will also be able to design payment products based on instant payment, like digital wallets, for example. So, and for the tax, for the authorities, it's mostly for the tax authorities that will be able to receive tax again immediately. So this is a great benefit and incentive. So there is something in it for everyone in our proposal, and that's why it has been so widely welcome when it was adopted a couple of weeks ago. We had, I think it is rare, we had a quasi-unanimous let's say, praise for the proposal. Of course, it still has to be negotiated, and I think we'll come to that in a moment. But it was very welcome, and we know why.
Yeah, well, and just right now while we're sitting here, and I'm no expert, but the one thing that sprung to mind when you mentioned the tax authorities was when I have to pay my taxes, I like to leave it to the very, very end, not because I'm procrastinating, but because I want to hang on to my money as long as possible in my savings account, so that even though it's not very high interest, but it's still a couple of pennies in my pocket rather than giving that money earlier to the government and it's pennies in their pocket. So yeah, if you set it for the absolute last minute and you're guaranteed that it's going to go through, the consumer is winning because they're getting a little bit of extra interest on that money that's stuck around in their bank account.
Indeed, for you today, Aidas, waiting for the last moment means waiting for the last day. Here, the last moment means waiting for the last minute.
Mm-hmm. Yeah, it usually would be like I sort of budget 3 days, but now when this gets into force, then I'm going to wait until the last minute, well, maybe last 10 minutes. Also, I thought that since merchants are going to have more money, like actual money, it's like in their accounts rather than floating around somewhere as a promise, and just the old axiom that money makes money, it sounds as though that this would have an impact on the economy as well, that there's going to be more money circulating in the economy.
Well, not more money, but it will circulate quickly. This money will be available quickly than currently is the case for consumption, for example. We have calculated that any day, there are about 200 billion euros in the float. That means in transit between accounts. Mm-hmm. And this is because of the current rule, which is day plus one rule. We will, with instant payment, we will much quickly be able to exploit, use, consume this money, this float of money. So that's a huge benefit for the economy. You are absolutely right.
Mm-hmm. Okay. When I was reading up on this, I thought about one thing that sort of gave me a pause for thought. Instant payments. Okay, so I do an instant payment and that money immediately leaves my account and it immediately goes into somebody else's account. What if I make a mistake? I mean, like if I'm, doing an instant payment to an online shopping company and I change one of the numbers in the IBAN accidentally and that money goes to an online something else company. Am I going to be able to claw that money back? Because it's already gone. It's out of my account and it's in that person's account. And of course, hand in hand with that goes fraud. So are there any mechanisms for protecting us against fraud?
Yes, there will be. There will be in our proposal. We have proposed a preventative system of prior screening or prior verification of whether the name of the payee and the payee's IBAN number match. So in other words, if you've made an error in typing the IBAN number, the system will immediately detect that there is a mismatch. And the system will say, hey, Aidas, are you sure you want to execute that transaction? And then you will say, oh, there is probably something wrong with it. And then you will check and realize that you made a mistake. Or you may realize that there is a fraud. And there is this system currently exists in one country, in the Netherlands, at least in the way we have proposed it, and it has proven extremely efficient already in the Netherlands, with a reduction of fraud of about 80% and a reduction of errors of about 70%. So it's hugely efficient, and we would like to extend. We see no reason why not all EU consumers should not benefit from such a system. But it will be, for the time being at least, only for instant payment, because you're right. For instant payment, there's a perception, because of the speed of the transaction, there's a perception that if you realize something, it's too late. In reality, we don't have any evidence that there is more fraud with instant payment than there is for regular payments. But there is certainly a perception that for instant payment, it's too late, even if you realize rapidly that you've made an error or that you've been defrauded. So we are going to try to remedy that with this preventative system.
Well, that's good to know. And it's good to know that it's been field tested in the Netherlands. And the Netherlands, obviously, they know what they're doing. So if it worked really well there, I'm sure it's going to work across the Eurozone, across the single European payment zone. I think what the main thing is that the way that I've thought of it was that instant payments is like cash, in the sense, like when I'm using cash, I pull it out of my pocket, out of my wallet, and I handed it over to somebody. So money has actually changed hands. So, but it's good to know that there is a mechanism for that. These days, obviously, something that a lot of us are concerned about, or all of Europe is concerned about, with Russia's war against Ukraine, is sanctions. Does this have a sanctions angle? I think it might.
Yes, it does. It does, because the current regime of sanctions screening, which is performed by the banks in the EU, is rather inefficient when you think about instant payment, because again, instant payments have to be executed within 5 seconds, and within these 5 seconds, it is very challenging, not to say impossible, for the banks to verify that the recipient of the instant payment is or isn't on a list of sanctioned people or companies. And currently, the system of transaction by transaction screening gives rise to millions of aborted or rejected transactions, of instant transactions, because a software has signaled that there is a possibility that one of the people involved in the transaction might be covered by a sanctions list. And of course, what does the bank have to do to verify that whether it is or is not the case? And we know, because we have all the figures, we know that in 99.8% of cases, it ended up or turned out to be a false alarm. But even for all these false alarms, you realize only too late that it was a false alarm. And by then, the instant payment has been rejected. So what we want is to introduce more efficiency in the sanctions screening process by replacing a transaction-by-transaction screening with a list, a daily verification of the clients, of the bank's client versus the list of sanctioned, the EU list of sanctioned persons. So with this, we are pretty sure that we will remove the current inefficiency in the system, which is, by the way, a killer for instant payment. But don't get me wrong, we are not going to affect in any manner the effectiveness and the efficiency of the sanctions process itself. It's just the efficiency of the screening which we are going to address, not, of course, the efficiency of our sanctions policy, which under these days is more important than ever. So there's no doubt we are only introducing more efficiency in the system.
So if I understand correctly, it's going to be basically an automated system, and the biggest benefit is that 99% of transactions that were not sanctions busting won't get flagged anymore, and people won't have to bear that inconvenience. We, the citizens, won't have to bear that inconvenience. But the bad guys who are sanctioned are going to get caught. They're still going to get caught, and it's just going to be a more efficient way of catching.
Yes, they will just get caught earlier in the process.
Awesome. It sounds like the Commission's decision is driving innovation, not only in the sanctions thing, which I care about an awful lot, but also you mentioned earlier about in industry and in banking that this is actually a proposal that is driving us forward in so many ways.
Yes, it is very much so.
Okay, well, this is probably going to be my last question because I've come to a much deeper understanding of this subject already in this short time. What are the next steps for this proposal? When are we, as European citizens, going to feel the benefits, the impact of this proposal?
Yeah, the proposal was tabled by the Commission on the 26th of October. It now has to be discussed and negotiated by both the European Parliament and the Council of Ministers. We have very good hopes that both the Parliament and the Council will go fast with their examination of this text, which I believe is not very controversial. It ticks so many boxes and is welcomed by so many stakeholders that it should be approved without too many snags. That being said, it still takes time to, of course, to Council and Parliament to discuss and to adopt. But our hopes are that the text will be adopted within a year from its date of proposal, which means within a year. That means in a year from now, in a way, or even before, and then it will take a few more months for the market to adjust to the new standards. For example, the banks will be given 6 months to enable themselves to be able to receive instant payment, and 6 more months to be able to send instant payments. So within 1 year after the adoption of the proposal, that means within about 2 years from now, we hope that all the consumers and companies and merchants and state authorities will enjoy the full benefit of instant payment.
Great. Well, maybe if consumers, if EU citizens nudge their members of European Parliament and member state or their governments at home, maybe they'll get them to agree faster and to get everything done faster. But in any case, this sounds like this is going to be one of those projects that sails through much easier than some other things, because it is bringing so many benefits and such innovation to the industry.
Yes, indeed. It will unfortunately not be an instant adoption. But we hope it will be a fast adoption.
Indeed. Okay, Eric, thank you so much for coming to the podcast today and explaining this. I think this is something that our audience is going to be very interested in, and it's something that the entire European Union is going to feel the benefits of in the not so distant future. So thanks again.
Thank you. It was my pleasure.
Okay. So it turns out that up until now, we have instant payments and we don't. The payment services industry has the capacity for it, but the Commission decided to nudge them to get things done faster and to get it done across the whole EU when you're transacting in euro. Quel point? Well, it turns out that not only are instant payments a very simple idea, with a click, money should change hands quickly, just like cash, but that it has some serious economic benefits. I read up on this. Up to 200 billion euros could be freed up on any given day instead of lying around waiting to be cleared. That's some serious money that can be put to better use being invested in creating jobs. Plus, it also sounds like online merchants might be able to get the stuff we buy out the door faster because they won't need to wait for our transaction to clear. They'll already have the money. The cool thing is that the EU is doing this like they do pretty much everything that affects consumers, carefully, and making sure it's safe and that it works right. Instant payments won't cost us more than the payments we make now, and there are protections against mistakes and fraud, and there's even added security to prevent sanctions evasion. Not bad. Well, that's it for today. Thanks for joining me, and do please like and subscribe. Tell your friends and keep coming back for more on the future of finance. Bye.